So I'll introduce myself, for those of you who don't know me. I think Yoshi forgot in the excitement of his presentation. I think he was supposed to introduce me. But the panel, Yoshi, you can go. And the panel comes up, please, then we'll start. So you just come up and sit down and I'll introduce you. One of the things that I'm Keith Chapman. For those of you who don't know me, I'm from Australia. I'm not from Austria. If Bernard's in the room, he keeps trying to tell me that Australia and Austria are the same country. We know we can't play soccer/football. The Austrians apparently thought they were a show the other day, but given we're in Hungary, we must have brought, as Vicky said last night, maybe we brought some good luck to the Hungarians in that process. One of the things that I don't like about seminars like this, if I'm sitting in the audience, is a talking heads process, where we all sit up here, people present slides, you get to sit down there. After an hour and a half of this, you're probably starting to doze off a little bit. So we've actually set this one up as a different format today. So the way we're going to do it, we're going to have Paolo for 10 minutes, and we have a cut-off switch after 10 minutes to make sure Paolo doesn't keep going. John's Maroney sitting next to him is the cut-off switch. Then we will have audience participation, and we ask you to ask questions in that process. Then we'll have Hugh and Dan give an industry perspective on the ICS process, and again, after that, we'll stop again for industry participation and stakeholder questions from the floor, stakeholder or member questions from the floor. And then we'll have Kevin give a Kevin view. I asked him whether he's given an IAIS view, a Kevin view, or a US view, and he said yes. So I'm not quite sure what Kevin's going to say in that process, but it'll be very worthwhile as well. So that's the approach we're going to take. But a lot of that and the validity and the interaction there depends on you. So I want you and we want you to ask questions. We don't want you to tell us who you are, because most of you we probably know anyway. And we don't want you to tell us who you're representing if you're a representative for a body or an industry association. If you want to ask a question, we'd actually like you to ask us a question that we can have the dialogue and the discussion around. And as Yoshi said, we do have the Exco dialogue this afternoon, so you will get another chance at some of these, hear some of the issues around these things. Now, CVs can also be deadly boring because everybody has Google now, and you can Google and you can find out all you want to know about any of us. But one of the things we usually miss is what people were before they were involved in this process. So what I've actually gone and done is a very few dot points about people up on the stage, about what they were doing before they were in their current roles. Because one of the things we often miss about people we deal with is what is their background and what have they had before they became, the architect of the ICS, or the head of financial stability, capital and financial stability at the IAIS, or the global regulatory affairs for AIG. So, Paolo, bank and insurance background at the regulator in the UK, but what you probably didn't know is that he was a financial modeller in the oil and gas industries before he joined the UK regulator. So Dan, I've only ever met Dan as part of this process, but Dan used to be a federal prosecutor, so I can't say much about him. And real estate development, so things which have nothing particularly to do with his role now, except giving him a background. But they're the sorts of things that we don't know about some of these people. Hugh's been around for 28 years in the insurance industry in the UK, and probably more, half of that time, a bit more active globally in terms of the process. But not surprised, I couldn't really find much about Hugh, other than he was a member, he worked at PwC before he joined the industry. So maybe that's the accounting background that you don't really disclose too much about what you've got behind you. John's been at the IAIS for quite some time now, but back in the old days, when he was back in Australia, at one stage he was the Australian Government Actuary. And Kevin's been, so you're in the public service in Florida since 1988. So that's a bit scary, because that means I've been in the public service in Australia for longer than Kevin's been in the public service in Florida. So But many years' experience at the highest level of the NAIC and also at the highest levels of the IAIS. And for those of you who didn't know, this is Kevin's last meeting as an official IAIS person, and he will be, I think as of yesterday, you officially retired as the Vice Chair of the Executive Committee, but you know, a lot of background in terms of how the IAIS is operated. So that's who you have up the front. And as I say, I'm not going to stand here and talk for a long time, I probably have already, but we'll just flick to the people to give the presentation to talk about this issue, about the insurance capital standard and the viewpoints on it. But we will be breaking for questions and we will be asking you to participate in that process. That's what this is about. This is about participation by you and by us and having a discussion about these issues. So thank you. So Paolo.
Okay. Good morning, everybody. And all I thought I will give you is just an overview of what we are doing, why we are doing, and why it's important that we do that. I mean, just to pick up on what Vicky has been saying before, I mean, the ICS has been developed in the context of the IAIS mission, which is maintain fair and safe and stable insurance markets for the benefits of policyholders and also to contribute to financial stability. The ICS, Insurance Capital Standard, and MAC is not an insurance committee show, aims at comparability of results across or outcome across jurisdiction for increased mutual understanding between supervisors, develop a common glossary between supervisor, firms, and so on. We recognize that developing an insurance capital standard is not an easy task, and it's something that cannot be achieved in a day. And this is the reason why the IAIS decided to stagger its approach by setting up milestones, version 1.0, version 2.0, and the ultimate goal. It is a multi-annual process with field testing, consultation, engagement with stakeholders, and so on. And what is quite important to recognize that not everything can be addressed in a single year. We've been working now for over 3 years on the ICS, and we are trying to address the material issue on a year-to-year basis and try to refine things as we move along. But still, we're not halfway through. We still have a long way to get there. What is quite important to recognize as well is actually that the ICS is a group-wide consolidated capital requirement. It's not a legal entity requirement. It's a group-wide capital requirement. And once agreed, will be one of the measures of capital adequacy of the firm, not the single measure of capital adequacy for the firm. And it is going to be part of CONFRAME. It's not a standalone document, so it will be reinforced by the existing and the proposed CONFRAME framework. The three main components of the ICS are valuation, or the two valuation as it stands now, a market-adjusted valuation, and a gap with adjustment type of valuation, qualifying capital resources, and an ICS capital requirement. In terms of process, we have done a first consultation document in 2014, 2.5 field testing exercise. And for your pleasure, you're going to get a second consultation document in mid-July. And because we recognize that it's quite important for you, we are giving not the usual 60 days for consultation, but 3 months for consultation. And at the same time, we'll be releasing publicly also the field testing technical package, so that actually you'll see the consultation document, which is a more high-level document, and also some of the technical details which we are currently field testing. When we started in the ICS development, I mean, we had 34 volunteers. Gradually, over the years, this number of volunteers and the interest from volunteers had grown. We're now 42 volunteers in our process. We started with 34, and they represent broadly all jurisdictions, all markets across the world. We get a good picture. Certainly, we can do even better, And we expect that once we get into the confidential reporting state, we will get more and more firm, because it is quite important for us to assess what we are doing with a very representative sample. And the more we can get close to the whole population, the better it is to identify issues, problems, and so on. Apart from, in terms of engagement with stakeholders, we spend lots of time with our volunteers, but not only with our volunteers, also with stakeholders. This year we had stakeholders meeting in Singapore, Basel, and next week I'll invite you on Monday in New York, where we're going to have a capital-related stakeholder meeting. In terms of who's developing that, it's a broad membership, and all major jurisdictions are represented there. And this is quite important because we then could distill our view, and we can have a better understanding of where the markets are. In terms of the way we are approaching the development, the first real field testing exercise on the ICS was last year, and the focus was mainly on the design, the building blocks of an ICS, and the development of a standard method. This year, we're trying to refine the design where possible in the light of the feedback received, but also coming to better calibration for the risk modules. And our volunteers, for example, are quite aware that we are taking seriously what we heard from them and what the results show. And we are improving both the design in some cases, but also the calibration. And we're also collecting data directly from firms, and also will invite to our consultation for all interested parties to provide information which can help and support the development of appropriate calibrations. This could be on methodology to be followed for the calibration, but also with respect to data, which is quite important to come out with appropriate calibration. Because what we have to remember is we're developing a global standard. And it's much more difficult to develop a global standard than a single jurisdiction capital standard. The products may be called the same way in different jurisdictions, but they may behave in a completely different way. And what we're trying to build is something which doesn't work on labels, on product label, works on risk. It's a risk-based approach. In terms of, just to give you a flavor of the issue which are critical to the development of a capital standard, was quite important, and will be highlighted also by my colleagues in the panel, is valuation. This is the foundation of an insurance capital standard. We recognize there are differences of views across the world about valuation, and we're trying to reconcile those views. It is clear that for ICS version 1.0, there will be two different valuations, but the important message is these approaches need to converge. And converge doesn't mean that one approach has to converge to the other, but the two approaches need to converge to a common goal. This is quite important, and I will repeat. Convergence means convergence towards a common goal, not convergence of one towards the other. Capital resources. Through the first exercise, we've done lots of tests on the criteria for what is supposed to be a qualifying capital resource, and we have a better understanding of what is causing financial instrument not to qualify. We are refining our proposal, and in the consultation document, you will have also some questions for you. We are also considering, should we, in the case of mutuals, what should we do about mutual? Or should we do anything about mutual? Management actions, how should we consider management actions? And also what is quite important, because it has a big impact on a capital standard, is tax. As Italian, I always say, I hate taxes. But we need to have a holistic approach across the three elements of the ICS, across valuation, across capital requirements, and so on. And these are a huge impact. The impact that we've seen on our data and the inconsistency which are being picked up and also picked up by our volunteers are quite significant, and we need to come out with a consistent and coherent approach for that. Interest rate risk. This is quite important, quite fundamental. And The challenge we face with respect to interest risk is certainly we are operating, at least developed jurisdictions are operating in a low interest rate environment. And calibrating an interest rate risk approach for a low interest rate environment, it is quite a bit of a challenge. And again here, we're asking our volunteers and through the consultation for suggestions from you and input from you. Currency risk, we evolved, for example, compared to last year, where we had 2 shocks, to a more kind of more granular type of approach, which captures better, and we think captures better the risk. Or on credit risk, for example, we refine our approach to commercial mortgages. And this is a significant improvement in terms of granularity, in terms of risk sensitivity, and it builds up on suggestion, constructive suggestions, which we receive by our volunteers across the years. And we, in terms of process, we launched the 20th of May. The field testing exercise is divided into stages, as you probably know, or 2+ stages. The first stage is more about the balance sheet and testing different discounting options, both on a normal conditions and on a stress scenario, because we need to make up our mind in terms of what works better on a stress scenario compared to what works better in a normal scenarios. And we have sets of option reference methods, and we'll receive lots of information which would enable us to assess what works better. We also collect data again from the BCR for the second year, and we collect information for HLA, higher loss and solvency for the first year. This is part of the confidential reporting from volunteers. And the second part of our exercise will be devoted to the calculation of capital requirements. There will be an opportunity to assess the improvement we've made to the standard method with respect to last year. And also we'll have another stage where actually we collect more data from our volunteers to enable us to refine the calibration both for life and non-life. And this is quite important. And our process in terms of collecting data from field testing will conclude in mid-October. And after that, we'll also be collecting the consultation document feedback around that approximately that time. And we'll have to take some decision on what should be on version 1.0, which will be published by the IAIS roughly at the same time we are talking now, next year. And it will be the London Agreement. And from that one, we'll move on an annual basis with cycle of field testing, consultation, and so on, up to 2019, when the ICS version 2.0 will be adopted by the IAIS for implementation starting from 2020. And I think it's probably a better time to stop here.
Paolo did something I didn't think he'd ever do, which is finish after 10 minutes. So, if I have questions, and we can throw it open to the panel, but does anybody from the audience wish to ask questions as a result of that presentation, or general questions? Remember, this is a test in terms of stakeholder participation. This is part of the IAS's policy of engagement with stakeholders. So, no? Okay. All right, so, Al, sorry.
Yes. Paolo, to your last point, just to make sure that I'm clear, so that at this time next year, we will have what is conceptually or perhaps realistically version 1.0, and then in 2018, we'll be looking at 2.0.
You will have in the version 1.0 in 2017, and then you'll have a consultation on version 2.0 in 2018. But version 1.0 is quite important for us because it's for confidential reporting. And there is an aspiration from the IAIS to get the full population of IIIG. That is an aspiration. As you know, we don't have any legal power to require anybody to submit data, but we think, and the feedback we are getting from our volunteers that see value in participating in this exercise, and as a testimony of that is the fact that actually we started with roughly 30, and we have almost 45 firms now in the sample.
So, sure, thanks, Paolo. Jeff?
Paolo, one of the leaders of Team USA, from a regulatory standpoint, recently said that they thought that the ICS would be a 20 to 30-year project to get to the desired state. And so I'm curious as to your thought with respect to a 20 to 30-year kind of to get to the desired state. So does that duration make sense to you? And then what is the desired state?
We cannot hear you very well from here, but if I understood, but if I interpret,
I'll move closer. So they were saying that the duration was 30 to 50 years as I move closer. No, I mean, so the comment that was made was that to move to the desired state for ICS, that I don't know if it was their opinion or the Team USA opinion, was a 20 to 30-year project. So I have a two-part question. Keith asked for tough ones, and I'll give you a tough one. Two-part question. Do you think the 20 to 30-year timeline is realistic? And what is the desired end state at the end of that of the ICS?
I'm Italian, so again, I have to say deadlines are there to be broken. We have at the moment 2 goals, which we have a clear deadline, 1.0, 2.0. I mean, as my wife again says, my horizon at the moment is how much we can achieve there. What I can tell you is, compared to where we started 3 years ago, we made significant progress, and we wouldn't be able to make significant progress without the help of stakeholders and our volunteers. And our volunteers recognize that we have done that, and the engagement has significantly changed compared to when we started that, from should there be an ICS to how the ICS should look like. And this is a quite important thing. Speculating is going to be 30 years, 40 years. It's a pretty tough call, and don't think I can answer that question.
But maybe, well, John, he's flicked it to John, but I mean, I think one of the things we have to recognise here is that things, always are going to change. So in 30 years' time, whatever you have in place in your current jurisdictions it was more than likely to change 4 or 5 times, even if we're talking about a legal entity type basis. So one of the really positive things we've managed to achieve out of the ICS work to date is at least we're starting to converge in terms of what we're trying to achieve and the approach we can go about it and how it fits the industry. Because we're not trying to come up with something that many of you wouldn't be doing part of anyway. We might flick going back to Dan and Hugh as part of the questions for them later. But already, this is IAGs. We're talking about internationally active insurance groups. You must already have processes internally where you can reconcile different regimes around the world. But come back to your 30, 40 years. Yep, in 30, 40 years, Jeff, if you and I are still around, it'll still be changing. But it'll be changing even if we weren't doing this exercise. You'd still be changing the way that it operates within the companies, and we'd be changing what we do within the regulation.
Just very briefly to add 2 points to what Keith and Paolo have said. The IAS has very clear goals for the next few years. So Paolo has explained the goals for version 1.0 and 2.0. That takes us through effectively to the start of 2020. We will be doing our update of our strategic plan and our next 5-year outlook starting in the next couple of years, and then we'll have very clear plans to take us past 2020. I don't think it's productive for us to try to plan what would happen in 10 or 20 years, because most of us probably won't be here in this room, and the world will change dramatically. So our planning cycle is, yes, focused very much on the 5-year chunks with very specific plans for the next couple of years, and in the case of ICS and Conframe, that has been mapped out for several years now that we will deliver that before 2020, and it'll then be up to jurisdictions to start implementing it, and we'll learn from the feedback from that process, and we'll move into the next 5-year cycle of planning.
So we've got one more question, if anybody has another question, or we'll move on to Dan and Hugh. So if someone's pointing, so Steve, okay.
Okay. Talked about convergence toward a common goal rather than convergence of one system toward another, were you referring to the market-adjusted valuation and gap plus valuation systems in the ICS?
I was referring to everything. I will not be that specific.
Right. Okay, so I'm not sure what we ended up deciding in terms of order. For Hugh, you're first.
Thanks a lot. I suppose coming from my background, especially with Aviva, we've been heavily involved in the discussions of the IAIS, and we've been involved heavily with the IAIS field testing volunteers for a number of years. I think generally no one would dispute that a single regulatory capital standard is an admirable objective, but coming back to portraying my accounting roots you alluded to, so is a single global accounting standard, which has proved pretty elusive so far. So that kind of begs the question that's been asked, which is whether ICS is an achievable goal and under what timescale. We know that, so that's on the table. But I think, as already been mentioned, undoubtedly the discussions have led on a global basis to an exponential increase in the level of understanding and mutual idea of where we're all coming from. And so I think that understanding, knowledge and appreciation of the different perspective has been of undoubted benefit regardless. And I think that is a really important thing that we shouldn't lose sight of. I think equally, you know, to be realistic, in common with many companies, we've equally spent a significant resource and cost on implementing various regimes around the world. So that is the other background in relation to that. So in our case, it was Solvency II. And so therefore, from a senior management perspective, we have little appetite adding to the layers. So then it's a question of, in that context, what role and what position is ICS going to take? Where does it fit in? What's the objectives, basically? Which is, you know, which are the common questions? I think if you come back to the overall phrasing objective, which is a global and risk-sensitive measure, which I think everyone would sense, I think there are a number of challenges that brings rises to, some of which we've already alluded to. I think there's a significant technical challenge. Perhaps one of the largest ones is, generically, how do you balance simplicity and granularity in order to get the risk sensitivity? That's a clear one, that if you try and do something generic to make it simple, then does that make it less specific from an actual policyholder protection and too simplistic? I think one of the key elephants in the room, as they say, is a regime based on two separate valuation approaches does raise a question of whether you've achieved global consistency. So I think that clearly there are divergent rules and key elements across jurisdictions on ICS, whether that relates to valuation or whether it relates to use to internal models that I'll come back to. I think the two balance sheets is probably the key short-term one. I mean, I've been involved in the insurance accounting debate for over 20 years, at which point my daughter was a toddler. She's now just in her second year at university. So no one would dispute that's an issue. But I understand the pragmatic approach in version 1, which is, well, let's go with 2 and let's pursue on that. But I think ultimately, if you were going to achieve global convergence in some form, that does need to be reconciled. And we shouldn't underestimate the challenge on that from a technical perspective. I think clearly there is a political challenge. That challenge, I think, is both sides of the Atlantic. It's unfair to basically put it on one side or the other. I think that to a certain extent, the recent announcement from the Federal Reserve have galvanized those positions. I don't think that's unhelpful. And in doing so, what that has done is, at least it's laid out, well, this is the basis from a US perspective, how we're going to engage on ICS. I think it would be wrong to articulate that means there isn't an ICS. It's just clear, from my perspective, I read it as we engage externally on ICS, this is the starting position from a US perspective. And you clearly see something similar from a European perspective as well. I think, as Vicky's alluded to, there's a separate democratic oversight challenge, which is differentiating a development of a standard from political implementation. And actually, there's a very common narrative going on, whether it's in Congress or the European Parliament, as to how that happens. And we shouldn't underestimate that, but I think that basically precludes the work that's going on. But clearly, we all know that's relevant as well. So you have this, basically, the global consistency challenge. I think the other element that, from my perspective, is really important is if we want to achieve something risk sensitive, what does that mean and what are the key elements of that? From our perspective, kind of like the volatility, discount rate and pro-cyclicality is probably the most important element in terms of the risk sensitivity. Look, we know that volatility, if you put it into a market regime, is a function. It was recognised by the IAIS. It was clearly recognised within the discussions in the European jurisdiction. So I think it's sensible, the approach on initial design focus, but clearly that all comes back to discount rate. There's been protracted discussions in various jurisdictions of what that actually means, but I clearly think that that's one that needs to be addressed in some form with a sensible outcome, because it has wider economic implications to both long-term product provision and the financial stabilising role of insurers. And in that content, I think it's important, at least from our perspective, we have a way that we use a discount rate that's relevant to the appropriate nature of our liabilities. And so while we see in the version 1 and the field testing certain options being tested, at least from our perspective, we don't consider that those are basically addressing the issues that we have in our UK market. We do believe that fundamentally the risk that we face is default, not credit spread, and we need a mechanism to get an appropriate discount rate to basically not have undue volatility or pro-cyclicality. So the discount rate is a key issue which needs to be addressed. And I know the framework is being tested this year. We need to really think about the calibrations, and to my mind, an earn rate has some merits that needs to be explored further on that basis. And so to that extent, we support the bucketing of liabilities that we're now seeing to try and get that granularity, but equally we think that there needs to be greater granularity in what's the relevant discount particularly buckets, and we think the life to non-life split is just way too wide at the moment, and it needs to be more focused on the individual portfolios and the underlying liabilities to reflect the ALM matching, which is the nature of our insurance business. So that's our perspective on the discount rate. I think the other one that's clearly being galvanized at present is basically the ability or otherwise to use internal models. When we talk about the capital requirements, I mean, from our perspective, I think we have a common perspective as both companies and also as regulators that we need to have a good assessment of the risks to which we're exposed so we can hold relevant capital, whether that's for economic capital purposes or for regulatory purposes. So there's a common alignment there. But I think in that regard, at least from our perspective, for our company, we believe that is best done through an internal model which gives us a thorough assessment of our risks in our context, of our liabilities for our policyholders in our geographic diversification. So we remain very committed to making certain that, I know it's not in version 1, but I think the use of internal models for us, we think is intrinsic to getting a good assessment. And in that context, I think we're naive to suggest that we don't use lots of internal assumptions, even with the calculation of our liabilities anyway. There's not a divide between internal models or otherwise. The nature of our insurance balance sheet, well, the left-hand side, is proactive and assumptions on what's going to happen in the future. So I think that's another important one. And so I think in conclusion, there clearly are challenges ahead. I think even within jurisdictions, there aren't straightforward views or answers to these, and we've seen that in both the US development and also in the European regulation development. But I think, we stand ready at least to engage on this on an ongoing basis. Over what timescale, well, who knows? My grey hairs may suggest that could be a while, but notwithstanding, I think the level of knowledge and understanding is definitely increasing, and we just basically, we need to address these challenges in some way.
Thank you. Thanks, Hugh. I think there are many observations that Hugh made with which I would wholly agree. There are a few with which I might differ and take some different perspectives. I think to set this in context, from the perspective of an American domiciled company with a deeply internationalized business model, and of course, most of you know that my company was founded in Shanghai in 1919 on the northern bank of the Whampoa River at a time when, if you looked south towards Pudong, Pudong looked very different than the way it looks now. And so we have a long history of deeply internationalized engagement with the world's markets. From our perspective, I think there are a couple of things that are worth mentioning. First is that there is a wide and robust and thoughtful diversity of views in the American industry. There are companies whose business models differ from each other. There are companies whose business models are similar. And while many, many thoughtful perspectives have been expressed in this discussion, I would not purport to represent them all. In fact, I think in some ways our company's views may not be the norm in the United States, in that we are strong supporters of an evolved ICS as a lodestar around which a thoughtful consolidated group capital structure could be developed. But I think it's important to think about the context, because there is not just one current effort that's going on to develop a consolidated group capital construct. There are now 4 which are going on simultaneously. There is the work that is, that is going on here at the ICS. There is the work that the Federal Reserve Board will be undertaking in the coming year to develop a consolidated, factor-based consolidated group standard for the American domiciled G-SIFIs. There is the work that the Federal Reserve Board will be undertaking to develop an aggregated building block approach for the other companies who are regulated by the Federal Reserve. And there is a simultaneous, ongoing, thoughtful, important project which the NAIC has begun in the United States to develop consolidated group capital standards for those areas where consolidated group supervision under state statutes and under the evolving model codes that the NAIC superintends would be appropriate. We don't regard this diversity of effort as being problematic. In fact, we actually think it's deeply productive. It is our view that we intend to engage with each of these streams, probably the least with the aggregated and consolidated work that the Fed will be doing, but that it is important to take the view that intellectual cross-pollination, cross-fertilization, the exchange of ideas and concepts among these 4 work streams is actually something that is going to benefit each of the work streams in their individual contexts and will deeply benefit the ICS. I think I would agree with Hugh in many important points about some of the key challenges that are going to need to be addressed as these 4 work streams go forward. But before I do that, it's important to recognize what a significant evolution just the existence of these simultaneous work streams actually represents. The idea that consolidated group supervision has an important, valuable, complementary role to the existing supervisory regimes of the operating entities and the licensed insurance companies is a globally shared perception. There is virtually no one who argues against the idea that there isn't something that can be added that is of value. From our perspective, it will be of value both to my colleagues in senior management and also to our regulators. In addition, I'd make the point, which I think is too infrequently made in this discussion, which has tended to focus around the technical questions of how to develop a capital regime, and that is that it's not just motherhood and apple pie that leads us to favor the development of a convergent global capital regime. In our assessment, this is going to be, in the long run, an essential underpinning of achieving the political consensus across many jurisdictions that will be necessary to facilitate global market access for those companies who wish to participate in the global markets. Only the development of a thoughtful and wisely structured consolidated group capital regime can serve as the necessary political architecture to allow regulators in different jurisdictions to allow the kind of market access that I think all of those of us in industry who are committed to an internationalized business model would seek. And this is something that we are going to need to do for ourselves. This is the first, just adverting to events in the United States of the last 6 months, we are now in the first American presidential election in living memory in which not one presidential candidate of all of the group of candidates in the primaries and in the forthcoming general election has expressed any support for government-sponsored international trade agreements and international trade access agreements. While the Federal Insurance Office is doing what we think of as a very important piece of public service in facilitating the ongoing negotiations about a covered agreement, in the end, those of us whose companies are dependent on and committed to an internationalized business model are going to have to solve the global market access problem for ourselves. And in our view, achieving consensus on a convergent global capital regime is going to be an essential element of that process. And that's something that is very important to our long-term view of the world. And we also believe it is very important to the interests of consumers around the world. We are perfectly prepared to compete head-to-head with our friends and colleagues in the room. We would not think that the interests of taxpayers and consumers globally were served by market protectionism. And so for those reasons, we really are very deeply committed to the process of convergence. I think the key standards that are going to need to be addressed, and some of the key technical questions are some that have been mentioned here and a couple, perhaps one or two others as well. I share with Hugh the idea that one of the central points is the selection of a valuation regime. Here, though, I would make the observation that I don't think this is an issue which is, which is quite as starkly contrasting as some of the discourse around this question would suggest. My expectation, and again, we will all see as the Federal Reserve receives comments, thoughtfully acts upon them, and then begins the process of framing an NPR for the consolidated group capital standards. But my guess is that although the Fed has expressed its view that it will be driven off GAAP numbers, I think there will be adjustments in that. I suggest and I think that the adjustments will move in the direction of a more economic view of insurance company liabilities. We would think that is a sensible evolution in terms of developing a capital standard. That's also an evolution which is in line with some of the thinking behind the principles-based reserving movement in the United States, certainly behind the current evolutions in IFRS 4. And on the other side, I think it is also very clear that the market-adjusted valuation construct, which sits underneath the ICS at the moment, has itself migrated away from the most pure kind of market valuation construct as well. I think there is reason to believe that common ground can be found over the next few years on a valuation regime and on a valuation approach which will satisfy interests in multiple jurisdictions. And I don't want to be so narrow as to suggest that this is simply a transatlantic issue. I don't think it is. I think other regions and other regulators have important views in this respect, both in Asia, in Latin America, in the Middle East. I think we will hear more from those views as the discussion evolves. But I would strongly support Paolo's observation that convergence means convergence away from initial starting points and towards some common ground on all sides of the discussion. I'm quite optimistic on the valuation side. I think I agree with Hugh completely that the technical question of how best to address the issue of the long-term discount rate is one of the most important technical issues that needs to be addressed in all of these systems, and it's both a real issue, and I completely agree with Hugh that default rather than credit spreads is really the touchstone in this area. The goal should be to have a regime which discriminates between signal and noise. Some volatility in the external world is genuinely noise given our business model. Some is signal, on which management and supervisors alike should be informed and should be ready to act. And I think, again, this is a process where the current field test will yield some useful information, but I think there is a couple of years of important technical work that will need to be done to come to a solution which protects the long duration products which are essential for the protection of consumers in the developed world and in the developing world on the life and retirement side. That's an important interest of AIG, it's an important interest in our industry, and it is an important political interest for our supervisors and for our legislators. On the modeling question, again, I think it is a question of degree. The Federal Reserve, in its comments, both from the staff and from the board, have made it clear that the predisposition of the Federal Reserve in its approach to these matters is that they are not partial to the large integrated economic capital models as being the key drivers of a capital construct. I think it is, in a sense, a commentary on the existing structures in Solvency II that none of the major companies in Europe have been able to live with the standard formula. All of them have felt it important to move to an internal model-based approach. I think the question that will need to be addressed in the coming years as we find convergence on this issue is going to be what are the particular issues which are being served by the internal models in Europe, which were thoughtfully, carefully constructed at great expense to protect important aspects of the business model, to protect the recognition of diversification, to protect other issues which are entirely legitimate and entirely driven by thoughtful, well-constructed, safe and robust business models. So I think part of the task in addressing this divergence in intellectual approach on the modeling question is going to be to tease out from the existing highly sophisticated European models the questions, the issues in the business model which those models were designed to protect and to facilitate, and then to be able to look at those and see to what extent they must be model-driven or to what extent those are issues which could be built into a more prescriptive construct. The last point, which hasn't been mentioned here, in terms of our thinking about how to address the possibilities of convergence, is we do tend to lean in the direction of a slightly less granular, somewhat simpler capital construct because we actually believe, as a matter of design architecture, that the wisest approach to the design of a capital construct is to think of it as entirely linked to a more granular program of stress testing. And that in many respects, the stress testing program serves as a kind of pressure relief valve to allow a more simplified, less granular capital construct to still be a thoughtful overlay with the idea that additional granularity as needed is provided by the scenario design process and the mechanisms of stress testing. So I would actually say that the last observation I wanted to make was that in thinking about the design architecture and the proper balance between granularity and risk sensitivity on the one hand and relative simplicity, relative comparability, and relative tractability, both from a regulatory perspective and from an industry perspective, is that it's important to have in mind the idea that no capital construct lives independently of the stress testing regime which accompanies it, and that only by considering those as an integrated piece of design do we wind up getting the kind of result which I think all of us would like. So we are, in sum, entirely respectful of the diversity of perspectives, completely committed to the idea of a globally convergent complementary capital regime, of the belief that much of the technical work which is embodied in the ICS is excellent and can form the basis as it evolves for a useful global regime, but that there will be important points of technical advance and compromise which will be necessary, and that in the end, this is an enterprise which is worth doing and worth committing ourselves to, not only because it fosters better policyholder protection and a greater degree of systemic protection, but because in the end we see this as an essential piece of the political architecture which will support an internationalized insurance industry in ways that will benefit consumers all over the world.
Questions, I think you're going to...
Okay. So thank Dan and Hugh for that. So after hearing the industry perspective, I'm sure there should be lots of questions out there. So anybody like to ask the first question, either of Dan or Hugh or one of the other panel members?
Hi. Hello. Can you hear me?
Yes.
Sorry. I just wanted to echo Hugh and Daniel that volatility and the prosperity issue need to be addressed properly, especially from life perspective under the ICS. And we look forward to working with the IAIS to address those issues through a field testing process going forward. Thank you.
So anybody else? Okay, so maybe I'll ask a question. So I'll ask perhaps Paolo or John to, maybe John, I'll ask John a question, otherwise he's going to sit there without doing anything. So John, could you just remind us where the concept of the ICS came from in terms of, so what, because I think that gives colour around what we're actually trying to achieve in the whole outcome.
I arrived in Basel shortly after the last meetings here in Budapest. I was here in 2009, and the discussion within IAIS at that stage was around about should there be global capital standards, and that discussion continued for the next 4 years. And in July 2013, so almost 3 years ago, a decision was made in conjunction with dialogue with the Financial Stability Board that it would be desirable to have a comprehensive supervisory framework, including a quantitative capital standard. So we almost had QCS as the acronym, but we did successfully change that later that year to Insurance Capital Standard to make sure that the insurance part of what we're doing was front and centre. And essentially the decision in July 3 years ago was to build a work plan that would map out the path towards the ICS as part of ComFrame, because ComFrame had already been launched in development with a capital adequacy assessment component to ComFrame. So the ICS was then brought into the ComFrame, which is the overall common or comprehensive framework for supervision of internationally active insurance groups, as the replacement for the capital adequacy assessment. That will still be there, but in terms of having a much more definitive, concrete view on a capital metric. So that was the foundation, and it was done both for policyholder protection reasons and to contribute to financial stability. And the work started initially on the BCR, the Basic Capital Requirements, which we completed in 2014, then on the HLA, the High Loss Absorbency in 2015, and in parallel we've been doing the work for ICS with the intention that the ICS, once sufficiently developed, would replace the Basic Capital Requirements as the foundation for HLA. So there's been a quite comprehensive, well mapped out work plan and timing since that decision was made in the second half of 2013. We're effectively halfway through that work plan at the moment, and Paolo and I reported to the key IAS committees this week that we're on track. We're ready to launch the consultation next month, and we've already launched the field testing, and we certainly look forward to this group and others We can't release the detail yet, but we can tell you there will be less than 200 pages to read in the primary consultation document, but more than 200 questions to answer. And if you've still got some reading capacity, there's another 300 pages of material in the technical specifications. And for those actuaries or other quantitatively interested people in the room, there's 47,000 data items that have been collected per volunteer. So it's quite an extensive exercise. It's the largest project the IAIS has ever embarked upon. Roughly 1/3 of our secretariat resources, that's 9 people, are working on it either full-time or substantially, as well as 30+ members meeting for a week somewhere every month in the world. We give them July off to have a rest once we launch the consultation, then they're back into data analysis starting August and September, and the volunteers, over 40 at the moment, and we hope next year there'll be substantially more because, as Paolo said, we aspire to have 100% of the likely internationally active insurance groups part of the process from next year when confidential reporting starts, so that the ICS can be designed most appropriately, that we get the benefit of the feedback from as broad a component of the internationally active marketplace and take that into account before we finalise version 2. Hope that's enough, Keith?
Yeah, so that shows the danger of asking an actuary, because then you end up with all these massive numbers coming back in terms of the process. But one of the reasons I wanted to go back to that, where it came from and the process, is simply, I think it was Hugh made the comment about the fact that so much work has been done so far means, I think I wrote it down correctly, that there's definitely a level of knowledge and understanding which has increased dramatically over where it was when we started this process off. So even if that is all we achieve, that has been a massive benefit, I would argue, to both the IAIS, the IAIS membership, and the industry. So, Dan, would you agree with that as a proposition?
Yes, I actually would. I think there are 2 aspects to that, Keith, which is, I think there is a much broader dissemination and a much deeper technical understanding in the industry of how to approach some of these questions and where some of the pitfalls and challenges really lie, as the industry has begun to focus and bring to bear the deep intellectual resources that our industry can devote to such matters. I also think there has been, certainly to my observation over the last 2 years, there has been a very welcome phase shift, in the sense that I, as a participant in this process for almost 3 years, I see the interactions both in the ICS process, in the Federal Reserve process, and in our discussions with our many state regulators and with the NAIC. I think there is a much more widely disseminated sense that constructive engagement on these matters will yield a better result. And I think that is a widely shared view, both among my colleagues and friends in the industry and in the regulatory community as well. So I really, I'm enormous. Hugh and I talk about it amongst ourselves as glass half full or glass half empty. I'm a glass half full guy. I actually see the kinds of intellectual piping being laid which will lead to successful convergence out of all of these 4 parallel work streams.
Yeah.
And it's probably worth adding a half-empty perspective.
So I think you all agree with between the two of them we've got a full glass, okay?
I think, because if you go back to the original construct, a lot was made at the time of the discussions from post-financial crisis was a common language needs to develop because people don't understand what's happening. If you came back to the group supervisor perspective for a few of the key companies, I think you could argue there is a far better understanding of the common. And to be honest, you know, given the well-known issues that we faced in 2008-9, that I think has been achieved in terms of understanding on that. I think the challenge is with ICS is how that's fine if you're developing everything in a vacuum, but the problem is that's not where we are. The reality is that there are various regulatory regimes being developed around the world, and I think the question that's going around is how does ICS as a format basically fit into the existing regimes that are already in development or just been launched. That is the key, still unknown, I think, on that, because the common language and the understanding has been good, and I think we've ticked the box of do group understanders sat on various places in the world overseeing global standards have a far better appreciation of what underlies. That, I think, has definitely been achieved. The issue is, how does that fit into the existing regimes? Does it supersede? Does it minimize? Is it a minimum standard? Is it, you know, is it outcome focused? And I still think that we can do this work, but that probably overarching question hasn't been answered, which partly comes back to the point that Vicky mentioned, which is the political level. So it's great to develop something on an ICS from a standard-setted view, but then you have to link that back to the political will, which is there an appetite or not to change what people currently do?
You know, Hugh, that's interesting in the sense that I agree with that completely. I'd just like to make the interpolated observation, which is that 3 years ago, in a sense, if you posed that question of where is the political will towards a convergent capital standard going to come from, the reflexive answer would have been that the United States might be the problem in this respect. And I think what has happened in some ways, by virtue of the fact that the ideas of consolidated group supervision and the consolidated group lens are newer in the United States by virtue of the historical fact of the robust success of our state-based, federalized, entity-level regulation. I think what has changed is that in the United States there is an increasing recognition of the utility of a complementary consolidated group capital lens which adds to and informs existing state regulatory structures. And in some ways, it's an easier task politically in the United States than it is in other jurisdictions where the idea of consolidated group oversight has been better established and where there has been greater degree of political commitment, in particular in the Solvency II jurisdictions over the past decade or so, towards a particularized view of that supervision. So I think in some ways the worm has really turned, and I think many of the political challenges are going to come from jurisdictions where the idea of consolidated group supervision is longer and better established.
It seems to create a nice bit of momentum. Kevin, obviously.
I'm not sure everyone would agree with that analysis, but let me start off by saying it is a pleasure to be here as my final, this time for sure, Vicky, it is my final. I promised to leave in Basel, but I'm back. It's like the house guest that never leaves. But as insurance commissioner, you know, I say to my constituents back home, you wear many hats. And as an insurance commissioner in the state of Florida, you promote markets, but you also are policing the insurance industry to make sure that consumers gets the benefit of their bargains and their benefit of their contracts. And here I'm, of course, representing not only the great state of Florida, but as vice chair of the IAIS, I've had the pleasure of serving over the last 2 terms, representing the NAIC, which has a very divergent group of interests as well. In about 2 weeks, I will not be representing any of them. I will be my own personal Kevin McCarty Independence Day. So I'm free to say what I want to say today. Not that I was ever really hemmed in the past. I just felt like I felt particularly independent today. I'd like to start off by saying that I totally am appreciative of the opportunity to go last, because that allows me to cherry pick the fine thoughts from all of my predecessors. One of the key issues that I see is that one of the comments that has been made and repeated is how much has been invested in terms of individual companies. For instance, how much has been invested in we talk a lot about transatlantic, of course we're talking really about a global capital standard, but look at how much companies have invested in terms of compliance with Solvency II. And the reluctance of gravitating towards a different system, that's perfectly understandable. That doesn't mean they won't make necessary changes if there is a global standard that is uniformly agreed to. But I think what we underestimate, and I think a couple of my colleagues have tried to underscore today, is how far we really come from where we started. and how where I think if you look at in the United States just 3 years ago, the idea of forming a group capital calculation group at the NAIC would have been virtually unheard of. And as a result of the work we've done in 2010 to 2015 on our solvency modernization, it was really a natural outgrowth from that, and involved and informed through what was going on in the aftermath of Dodd-Frank, obviously, which reaffirmed state regulatory authority, but also set up an authority with regard, as has been already stated, with regard to systemically risky insurance entities, and a bifurcation of the system in terms of regulation. You know, one of the things that concerns me, I think, from a level is because of the differences in laws and valuation and discounting and views, but also the products and product distribution and the cultural differences across the world, the idea of getting at a convergence on a time frame that is acceptable to many of my colleagues is one that I think is overly ambitious. And my concern from the very beginning is that we don't establish a timeline where the timeline actually, to some extent, jeopardizes either the quality of the end product or our ability to verify through a consistent consultation process that involves a considerable amount of back testing and field testing. Because this is where we really learn if there is what the consequences of our decisions. It's one thing to get together and agree intellectually how a capital standard can be formed, but unless and until you go through a very thorough testing process can we actually see what happens. And this has been a very educational process for us. I wanted to take this opportunity to express my appreciation to Paolo and to John and to the IAIS team. As they said, this is probably one of the most work-intensive projects, and I have to commend them for their leadership and their dedication and hard work, and to the jurisdictions around the world who have brought forth a number of their own staff members to contribute to this very valuable project. You know, as my colleagues from AIG has stated, you know, the U.S. is very committed to this process. The NAIC, the Federal Insurance Office, and the Federal Reserve are very committed to working on a achievable global insurance capital standard. And as evidenced by the efforts and time and talent we have contributed as well. We believe that this, as all of the executive committee around the table last year, recognized that we had to look at this in a stair-step approach, that we had to look at what was achievable in the short term, and then in the long term, perhaps not 30 years out, Jeff, but in the long term, there are some of getting towards more convergence. And I think before I get into the details of that, I want to take this opportunity to thank Madam Chair, as I affectionately refer to her, Vicky Supporta, for hosting this meeting contemporaneously with our meetings. Vicky has been a big supporter of making sure that there's changes in stakeholder engagement. I know that we've gone through last year, we didn't have stakeholders participating at the annual conference. That has all been changed. We have a task force that's working on in improving stakeholder engagement, and I wanted to thank her for her leadership in the executive committee for the global conference and seminar, as well as changing the rules of engagement with regard to our annual conference. Regarding some of the outstanding issues, I think we've heard that many of them already articulated today. There are certainly concerns about the level of discounting. One of the more parochial issues for us that has come up most recently is the issue of the ability of any of U.S. firms to be able to use NAIC designations for investments. This had been something that we used last year. This year we will be doing it with and without those investments. But I think, again, the data will drive the results, and I think we'll see exactly how important that might be with regard to U.S. firms. And we, of course, Mike McGrath once said, you meet one U.S. Internationally active firm, you met one internationally active firm, because every firm in our country is very diverse across the spectrum of the United States, and then you compound that by the complexity across the world. So I think it's important for us, in our view, to continue to have a gap plus approach. I don't know if I'm as optimistic as one of my colleagues up here as to how quickly those will converge, but there's no question that for the near future that we need to continue to have a gap plus valuation approach. We in the United States regulatory community are somewhat concerned about the strict criteria on capital resources. One of the issues is the structural versus the contractual subordination, which remains an important issue for us. The treatment of senior debt as qualified capital, as well as surplus notes as Tier 2 capital. We would obviously like to see that as a Tier 1 as well. And there's certainly some debate around the issue of non-paid-in capital items and whether really that makes sense given how we're treating structural versus contractual. Also, the issue that has come up in hearings that we've had in discussions in the United States is contract boundaries. You know, that if we're looking more and more towards an economic view of the balance sheet, does it make sense to say, for instance, somebody who writes a great deal of group life or group disability, are we just going to assume a zero uptake rate for the next year when the historic numbers could be 30, 35%? Again, decisions that are made that seem to me consistent with a particular accounting system or a particular structure or make sense because of their limitations of the contract may have huge consequences for companies, and that's why it's important for us to continue our commitment for testing in the field. With regard to capital requirements, calibration is likely to continue to be an ongoing concern. Another concern is the potential role of models, as has already been told. Models are used. The debate is to what extent, and to what extent do we have confidence that the models can bring us around to a consistent valuation, consistent comparability system. And there's also some concern that too much reliance on models that are strictly prescribed may actually enhance systemic risk. Another area of concern that I have, I think, is what was already been raised is the issue of complexity. I mean, it could get to the point where we're testing too much and there's just too much complexity in the system and it may collapse under its own weight. An issue that was raised, and we don't like to use the P word, political, but the reality is that whatever we do has to be, I don't know if this is a word in the English language, implementable, but we use it all the time at the IAIS. You know, as I said before, the United States recently in 2010 enacted its most comprehensive reforms in the passage of Dodd-Frank, which reestablished the U.S. regulatory system, but it also designated our FSOC program. The reality is that we have to come up with a system that is compatible with the U.S. system. That doesn't mean that the U.S. system is not going to evolve and not going to change. But we have to understand that large jurisdictions have to be able to continue to move towards convergence without destabilizing their marketplace and causing unintended consequences to companies and to policyholders and to the larger economy. My colleague had mentioned that we began a working group working on our group capital assessment. Work is progressing along with that committee. I have a great deal of confidence in their chair. He happens to be the Deputy Commissioner of Florida, who is now the new Insurance Commissioner of Florida, and I have every confidence that he will deliver a quality product in the time frame prescribed by the NAIC to be 2017-2018. In closing, I'd like to just go back to one of my colleagues here described earlier and refer to one of the ICP Principle 8, which essentially reminds us of the importance of striking a balance between complexity and simplicity, and that if we make it too complex, it'll be too difficult to implement, but we have to also avoid it to be too simple. Thank you.
So thanks, Kevin. So I think Kevin covered everything there. He covered Kevin views, NIOC views, personal views, IAIS views. So you lived up to what we expected in terms of, so thank you for that. So we've got 15 minutes left. So additional questions. Mac. Coming. So, but while we're waiting for Mac to get the microphone, unless I missed it, and I'm pretty sure I'm still awake at the moment, although it's getting pretty late at home in Australia. Nobody on the panel said the level playing field words, which, if nothing else, has been a major change over the last 3 or 4 years, because we used to hear all the time, I hope you're not going to use level playing field words in your question, no? But we kept hearing people talking about the ICS will destroy a level playing field. But I think what we've heard is that there probably isn't one there. There isn't one there now because things are so different across the world. I mean, AIG is different to Aviva, is different to Zurich, is different to CNA. So I think, to me, even the fact that those words aren't continually thrown back as being a problem with trying to converge on an international standard, I think has been a major change in the way we've all thought about this exercise, which I think is positive in its own right. Anyway, I digress here. Mac's got the microphone now.
Thank you very much. My name is Makoto Okubo, Nippon Life Insurance Company General Manager in International Affairs. Apart from the Nippon Life, I have 3 different hats. Now, the Nippon Life chairs the Life Insurance Association, so sometimes I represent the life insurance sector in the country, in Japan. Also, I'm serving as a Sherpa of the Asia Pacific Financial Forum Insurance and Retirement Income Workstream. So for the APEC region, we promote the long-term investments and longevity solution of the insurance companies and pension funds, and we draft the recommendation to APEC finance ministers, and I take initiative on that matter. And recently, I joined the consortium of Japanese entertainers in New York, so we promote making jokes in a public dialogue, even by a Japanese. So now, I'd like to comment on 2 remarks made during this panel discussion. First, I heard that there are 4 different initiatives going on, and I'm just wondering which 4 you're talking about. So looking at the whole Asia-Pacific region, we have a different initiative. In China, they have a CIROS. Look at the Singapore, they have RBC2, and different Asian countries, and different Latin American countries, and the other places, they are working on the reform of the solvency regulation. And many people show their perspective that if the ICS is flexible enough to capture those directions, that'll be ideal for them because they don't have to reverse their already made decision in the foreseeable future. So one size fits all would not work. While we promote harmonization because it makes our business very easy, but still we want to have some sort of flexible system to reflect the diversity. And also I heard the differentiation of the noise and the long-term perspective. This is absolutely important aspects. We think that economic information will be useful if it is used to determine the direction for the future, but if it is too much sensitive to the short-term fluctuation, because of this huge noise, we cannot use that information to make decisions. So let me share the same analogy that I made during the GFIA meeting in Marrakesh, because even the AOPA representative understood my point at that time. So talking about the airplane. So as I'm traveling around the world all the time, the people ask me a question: how do you spend time in the airplane? I watch movies, I listen to the music, but sometimes I see a global map because that shows me important information. What time is it now at the destination? How long it's gonna take before landing? But sometimes I see something that I have no idea why it's there, such as temperature outside of the plane. Minus 80, minus 90, minus 120. It's very, very cold and it's even volatile. Does it matter? It matters if I go out of the plane. But I have a lot of disincentive to do so.
You haven't done that yet?
I have a fear of height. So, and then, if I need to address those temperatures, I have to wear a lot of clothes, and it's very, very expensive. But don't forget that we may be probably flying to Paraguay. It's very warm there. So I'm just wondering if if I see the temperature at the destination is on the table, it may be useful. So we want to have an economic-based variation to give the answers to the temperature at the destination. In other words, we have two different questions. How do I look best with the current market, the current interest rate? Second question, how we can prepare best for the future, keeping up with the economic growth, and when the payment is due in 30 and 40 years. And market consistent variation assume that assumption that remains the same for the entire future, that will never happen, this has never happened. So this information is probably useful to address the first question, but it will not be the useful information for the second one. So you need some sort of adjustment, and I think that those jurisdictions using market consistent variation understand that, and they are trying to capture this. And I have been doing the dialogue with many different authorities, and they have many different ideas, and we are trying to compile those different ideas. So, but this is very crucial, and I want you to reflect. And I'm sorry, and I understand that I'm supposed to ask a question from the floor instead of making a presentation.
I think you've given enough there. I think you've given enough there, Mac, for people to answer the questions.
Let me conclude my remark by saying, what do you think about it? That concludes my remark. Thank you very much.
Missed it. So I think amongst all that, as usual, there's some real gems. Not saying that anything else is not funny, but there's some real gems. I think one of the real issues that we have to try and think about in this process as we go forward is that bit that I think everybody on the panel covered between simplicity and risk sensitivity. Because in large part, that also starts to think about or starts to cover the issue about whatever we come up with as an ICS, and whatever jurisdictions come up with now as entity-based capital standards, has to stand the test of time in terms of the environment around it changing. So if we all went back 10 years, who would have thought that the IAIS would actually be losing money from having bank accounts with Swiss banks? You know, negative interest rates and fees and charges, you're going backwards. We haven't got that far in Australia, so from our perspective, it's quite different looking in from the outside. So we need to have something that will stand the test of time. And I think the comments about stress testing were important in that regard. And I think the other thing we have to be very careful of too is, and I don't want to go back to Jeff's, whoever it was told Jeff it was a 30 to 40 year project, but it is a journey. And one of the things we have to be very careful of as we go into a complex process like this is to lock down bits which can be agreed. And the reason I'm saying that is, what we find is that new people come in. We don't want Hugh's daughter in her second year at university to be taken over from Dad in 10 years' time and going back and saying we need to go back and change those foundations, and yes, you need to. So I think as we go forward, one of the objectives the IAIS wants to achieve here is narrow the scope. So when you look at the 286 questions, which I think, you know, I didn't do the count, somebody else did, but there's over 400 there really, because some of them have, you know, A, B, C, D, E underneath them. But they're about getting information so that we can produce a narrower process in version 2. And I think that's something we need, you need to think about when you see the document. It's not designed to try and go this way. It's designed to collect information so we bring it back that way in the process. So Dan, you wanted to respond to?
No, I was just going to say that Mac's analogy of the airplane ride is really the most elegant summary of the signal-to-noise issue that we're going to face in this design. It's a great analogy.
Hugh?
Yeah, I think I think there were kind of like 2 points which I think are interrelated. The first one is actually across a number of regimes, particularly in Asia, there is development going on at a number of jurisdictions, which is absolutely clear. The second one is the concern about pro-cyclicality and how whatever the regimes responds to events. So it's all right at your particular temperature. What happens if you're in a different environment? This is where I come from, a country where we develop warships that don't basically work in warm water. So, And so in that context, I think the two are interlinked. It's understanding how does whatever any regime respond to different environments. So it's fine doing a point in time. The point is, I think it's a bit premature because we're still trying to do the design framework. The absolutely key thing is how does it respond in different environments, and does it have pro-cyclical or unintended consequences that we don't know, which partly links to we can't just look at this for a group-wide capital standard in terms of just policyholder protection. You need to interlink it about does it have macroeconomic consequences, which I think is what you're alluding to in relation to pro-cyclicality. And then to just link the two together, I think that that's partly a relation to do we really understand how a local jurisdictional requirement that's been developed, for example, in Singapore, links in or otherwise to the ICS. So is it a minimum? Is it instead of? Is it as well as? Because from a company perspective, we need to know what are the dials that we're managing it to. So if on the aeroplane, you'd also want the pilot to be able to determine which dials am I managing to. So I think that that's how I probably link those two comments together.
Okay, so that's a good chance. Can we have a microphone down the front? Oh, sorry. Okay. So we've got Fred.
Yeah, Fred Rowley. This is maybe taking us slightly away from that last point, but one thing I'd like to hear from the panel is where the IAIS is going in terms of fungibility of capital. The ICS, in a simplistic way, assumes that risk can be transmitted within groups infinitely. It may be in danger of assuming that capital can be transmitted in that way as well. So question for the panel is what is being done both in the modelling but also in the political implementability, if I can use that word, of fungibility of capital around groups.
Okay, thanks, Fred. Before Paolo answers, we're asking to be brief with the answer, not to cut the debate short, but we've seemed to have generated some questions right at the very end. So at the moment I've got Olaf, sorry I don't know your name, but okay, and then Rob. So we'll have those three questions after this, and then we'll call it a day for morning tea. So Paolo, do you want to, or John, do you want to answer the question for Fred?
Okay, but then those which are volunteers in field testing, they will know that this year compared to other years, we're actually collecting information which not only enable us to assess capital resources in abstract in terms of assessing against criteria, but also collecting information which may provide us information towards coming to a view with respect to fungibility. And it's because we are collecting the ICS, which is a consolidated capital requirement, but we also collect information with respect to legal entity capital requirements and legal entity capital resources. And we need to have this information. And this information is valuable for 2 perspectives. One perspective is fungibility, as you raised, but the other perspective is also about an assessment of the exposures which are subject to currency risk. And this is quite important because we need to get it right.
Okay, thanks, Paolo. So.
Yeah, thank you. A couple of comments and then questions about relating to the European industry's views. I think, first of all, the reaching agreement on the valuation for us is clearly key, in particular in respect to making sure that whatever measures are produced work for long-term business and capture correctly the link between assets and liabilities. I think in that relation, in that sort of context, we're a bit concerned whether the consultation will cover the relevant different options that are available, some of which have been tested under the field testing. And you mentioned narrowing. While we recognise the need to narrow, we also need to keep options on the table that could lead to solutions longer term, and certainly options which are used, for example, or found to be valuable within that Solvency II context in Europe, we think are worth continuing to test.
So I don't want to catch you too short, but...
Okay, I'll just be quick. Then I think key was also the back testing to make sure that we're avoiding pro-cyclicality and we know how it will work in practice. I think then leading to the questions, I think in that context, and given what we've heard about the way in which different regimes are being developed across the world, and of course including in Europe where we're just implementing Solvency II, is it still realistic to believe that by 2020 we'll have a ready-to-implement system So I think the question of whether that's too ambitious and that needs to be rethought. And I think the second question is, assuming once we have a system to implement, this issue about whether we've got a minimum standard, you've already said that you would allow or expect potentially regimes to add to the minimum. But if that's the case, why are you not, or could you clarify whether or not regimes such as Solvency II, which we believe must be good enough in a global context, whether that could be considered an implementation of the ICS?
Okay, so we might, in the interest of time, take the three questions, and then we'll see if we can do a quick response to it. But don't forget, we also have the ExCo dialogue this afternoon, where some of these issues around the implementation and the ICS process will be covered as well. So if we don't get fulsome answers to these last few questions, apologies, but we'll try and make sure we cover that off in this afternoon's session.
Okay. I'm Teddy Amari from Sompo Japan Nippon Co. Insurance Inc. of Japan. This is not a question but a comment. I'd like to express my sincere support for the ICS. Actually, I'm a supporter of the ICS, not necessarily the ICS, maybe the spirit and the ambition of the ICS, and especially for the convergence and economic valuation approach. So we are strongly supporting ICS project, and that's why we are spending so much energy and time in field testing project. And I'm concerned with recent discussion about the implementation issue. I understand implementation is highly political issue and it's a very difficult task to overcome. But since we have been spending so much energy and will be spending much more energy in the future, coming years, I want to confirm every jurisdiction are committed not only to the development of the ICS, but also to the implementation of the ICS. Thank you.
Yep, fair point. So, Rob? Yep.
And we do have already convergence, if you like, on ERM standards through the ICP, which was in 2010. So in 6 years, I haven't seen a lot of work in terms of Pillar 2. Happy to be corrected on that. But just thinking in terms of what Torello said in the NIC meeting, you can actually get, common stress and scenario approaches with ERM, which we all violently, I think, around the world agree on in terms of the ORSA. Although I know in Australia we don't actually use that term, but you could actually have a consistent and converged set of Pillar 2 requirements and have that developed now, because we all know that Pillar 1 is going to take forever. We've got 2020 version 2, and it's not as though APRA, for example, come 2021 is then going to turn around and say, tomorrow we now implement the ICS. They'll actually look at that and say, actually what we've got is already fine. And so then you'll take another decade or so for people and jurisdictions to look at the based, Model 2 version. So if you look at that, and I think Jeff's right, you're probably 2030 or beyond. So in the interim, could we not do, as Torello suggested as well, and look at Pillar 2 and stress and scenario and get some common approaches there by supervisors?
Yep, okay, fair question, Rob. So the chairman/moderator has done an awesome job. If I say so myself, it's now 1 minute past 11 o'clock. So now I can blame Paolo if we get to morning too late rather than me. So,
okay, I'll reply very quickly to the question from Olaf. In terms of options for this country, the consultation document is a different type of document than the field testing. In field testing, you need prescription. You need to say these are the options on the basis we are collecting data, and we need to set up some option which capture different aspects, and we can interpolate. Consultation document steps a bit back, analyze each one of the problem and ask questions on each one of the problem. That's why you're going to get roughly 236 questions, and this is why has been determined that. 2020, too early or too late. I'm Italian, I'm a procrastinator. Give me 20 years, I will do everything the last year. We need hard deadline to move the process. We'll meet the deadline? We don't know. At the moment, we need to strive to meet those deadlines. But my experience, if you give me 20 years, is what I said. Minimum standard. Minimum standard doesn't mean low standard. And some of the questions you're asking about implementation and so on, can only be resolved after the technical work has progressed a bit more. We're not mature enough. Like, depending on where we land, you can have different avenue for implementation or potential implementation. So it's too early from that's my personal view, to answer some of these questions. But certainly these questions are in our radar. And you'll see that we are not discounting this thing, because when you're going to see the consultation document, you're going to have a page which says, this is what this consultation document covers, this is what doesn't cover. And it's the list of issues you're raising. And why you're not covering provides a very succinct explanation for that.
Right, okay, so I think we'll call it we won't call it a day then, okay.
I can answer the other two very quickly.
Okay.
They're very good questions. I think you should bring them back this afternoon to the executive dialogue about implementation and about Pillar 2 and other things that are part of ComFrame.
Okay, so I'd like you all to thank the panel, and I'll thank you all of you, because there were some good questions and we created some good discussions, good debate there. So Yoshi's going to come and throw me off, but just in case he forgets to do this as well, please be back so that we can start promptly at 11:30 after morning tea.
Thank you. Fantastic panels, fantastic panelists, fantastic chairs, fantastic audience. Thank you very much. So just brief comments, and we will just adjourn. Just half empty, half full. Make it totally clear what's going on here. 3 years ago, we have no capital mandate. We have no ICS, BCR, HLA. We developed BCR 2014, HLA 2015, ICS version 1 2016. 3 years ago, glass is empty. Now we are half full. So direction is totally clear. And of course, as Hugh mentioned, it's a huge challenge to make it full. But we are sure, regulators around are sure that this glass will be full. And by the way, yesterday we have a one-day full discussion on this type of issue, and we are committed. We reconfirmed what we have discussed today, that all regulators around the world are committed to achieve comparable, substantially the same result across the jurisdiction through ICS. So we are fully committed. Whatever going on, the glass will be full. That's totally clear for us, and we work with you. And as we discussed today, it's totally clear you are fully engaged, and the glass will be full in the future, in the few years. And we discussed also yesterday, we should find a very practical, timely solution as soon as possible. One last comment, there is factual misunderstanding of one person, Kevin McCarthy. Kevin, you have misunderstood who you are. You are a house guest so long time, and now you become a member of family. So we miss you, but house is warm and comfortable, so we hope that you will come back soon.